India Inc.'s July-September quarter earnings season has got off to a good start. This is thanks to the large gains posted by companies in the metals and energy sectors. However, this masks the hit consumer companies and general manufacturers have taken on their margins on account of higher input costs. The combined net profit of the 222 firms that had declared their results for the September quarter of FY22 was up by 24.1% year-on-year to a new high of around Rs 70,400 crore. This was also higher than the Rs 65,550 crore recorded in the April-June quarter. By comparison, the combined earnings of these companies had risen by 90% year-on-year in the June quarter and by 25.4% year-on-year in the September quarter of FY21. The combined net sales of these early bird companies rose by 29.6% year-on-year to Rs 5.45 trillion in the September quarter this year, compared with Rs 4.84 trillion in the previous quarter. The biggest gainers were companies in the oil and gas and metals and mining sectors, followed by IT services firms like Tata Consultancy Services, Infosys, Wipro and HCL Technologies. In fact, companies in these three sectors accounted for almost the entire growth in the combined earnings of the early bird sample on a year-on-year basis. In contrast, general manufacturers and consumer goods makers reported a slowing of volume growth and a decline in margins, while companies in the BFSI space saw a further slowdown in gross interest income and an uptick in operating expenses such as salaries and wages. Though firms in the BFSI space reported a slowdown in interest income at a gross level, they saw double-digit growth in earnings thanks to gains from lower interest costs. Meanwhile, general manufacturers and consumer goods makers were hit by a sharp increase in commodity and energy prices. Many companies in these sectors reported sequential decline in net profits despite strong revenue growth. It was the same with IT services companies. Analysts at Nomura said companies had a limited appetite to absorb further price increase now. Nomura said, unless commodities or oil cool off, firms will face a difficult choice of raising prices further and risk demand impact or endure margin pressure. We believe latter is more likely.
So India Inc. has reported a fairly good performance thus far in the September quarter. But there are concerns on inflation led by rising input costs, especially oil, coal.
Yeah.
To what extent are the markets factoring in this thing right now?
I think the market has not factored fully for the rising inflation. Market as a whole need not worry about the inflation because the RBI is most unlikely to reverse the policy very soon, soft monetary policy. But certain segments have not factored in the impact specific to those sectors. If you look at the inflationary trend now, you can broadly put under two categories. One, metal.
Mm-hmm.
Second, specific minerals, like as you mentioned, coal. Third, oil. Fourth, food crops. Now, these are the four segments which have seen tremendous rise in the prices. And also the fertilizer inputs. This is the fifth category. Now, if you look at the fertilizer, they have not, corrected, and they have stopped import, and their revenues are going to be impacted badly. Margins are going to be impacted badly. There will be a delay in the subsidy. And if you look at the oil, there are a lot of chemical companies which are using the derivatives of crude oil.
Sure.
They have not corrected at all. So
do you see more
automobile.
correction? So do you see more market correction as a result then?
No, I don't see a broad-based market correction because of inflation, but I see a severe correction in certain pockets, like the chemical companies which are using the oil derivatives. Even if they pass on, there is always a lag of 2-3 months. So inventory will hit them badly. Then you will see the automobiles, particularly two-wheeler, getting impacted by oil, and fertilizer companies getting impacted. So then you have FMCG companies, some companies which are into healthcare products using the oil derivative input, they will be impacted. So these are the 4 or 5 pockets which will be severely impacted in the next 1 or 2 quarters, which the market, according to me, has not discounted.
To what extent can these companies pass on the rising input costs to the consumers?
See, like chemical companies, it depends on the sector. I mean, chemical companies can pass on, but then the problem for them is a 2 months lag.
Okay.
You know, so 1 quarter there will be a tremendous impact on the margin.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.